Hi guys, welcome to another live webinar. My name is Angelo. I am your host again for today's webinar. Wow, I see lots and lots and lots of interaction here in the chat, guys. Welcome everybody. I hope everyone is having a great day. I hope your trading is going well. And where is everyone watching from? Let me know in the chat. Where are you watching from? Asia, Africa. We have 2 regions right now watching this webinar. I hope you enjoy it. The subject of today's webinar is a much anticipated one of my personal favorite indicator setups, the Fibonacci Retracements. We are going to have another one coming up next month, which will be the part 2, which is the Fibonacci extensions. A little bit more complicated if you like, but more or less based on the same foundation as today's one. The chat is a little bit slow. Glad to see you, sir. Mr. Anonymous Ghost Detector. Wow, that's a very cool name. I'm not sure if you are a member of Anonymous or not. If you are, please do not hack my computer, this one or the one I have at home. India, Sri Lanka, Zambia, Africa, that's lovely. Okay, from Pakistan. Alright guys, well, I see some Arabic writing there which I don't understand, but I got good news for you and other Arabic speakers. We are going to be having next month Arabic webinars. So if you are an Arabic speaker and your main native language is Arabic, do stay with us. Subscribe to our channel, turn on the notification bell so you can be receiving notifications about them, because we are going to be having most likely every month Arabic webinars as well coming up. Another trader from India. Alright guys, and Ghana. Lovely, Saho, welcome. Okay guys, I'll start right now. Here is the presentation's first page, and let's jump straight into it. Here is our first slide, more or less, so stay tuned for the Q&A at the end. Let me just get this out of the way here. There we go, so I can have a better view of what's going on. Keep on sending over in the chat, guys, any questions you have. And there's a slide again. Do take a few seconds to read the disclaimer here on the bottom of the page. There are risks involved in trading, of course, so it's good to be aware of these risks. I see Jennifer writing hi. Hello, Jennifer. Okay, guys, let's begin our presentation. First one is a bit of history right now, the history of Fibonacci. Many of you may be aware of this indicator. First, we're going to learn a bit of a history. Here is a very old photo. This is a very old. Fibonacci, also known as Leonardo Benacci, was an Italian mathematician from the Republic of Pisa. Pisa is a part of Italy. If you all know your monuments, there's this tower which is leaning sideways. That is Pisa. So Mr. Leonardo was from that beautiful city of Italy. And he is considered to be the most talented Western mathematician of the Middle Ages. So a long time ago, very talented mathematician. Now here is what Fibonacci more or less has taught us. The golden ratio number. By the way, this is not something he invented himself. This is something that Eastern civilizations had already. They were aware of it. Just Fibonacci was the first person to bring this into the Western world. So the golden ratio number, 1.618, is found everywhere in nature and is used in architecture and other sciences. Shells, universes, galaxies, cones, even broccoli, as you can see, a type of weird broccoli, has the Fibonacci pattern. This little spiral you see there, where it starts with a smaller number and goes wider and wider, this is something that is mathematically measurable everywhere in nature. So it is something that we cannot deny exists. Galaxies and everything in nature is more or less created with this sequence. So we want to understand how to use this to our advantage in trading. Guys, little side note, if you do have questions, we do have moderators on the chat as well. So if you have any questions relating to the webinar, send them over straight away. Our moderators will be able to help you with answering those questions of yours. Back to the webinar. The Fibonacci sequence, very simple to understand. Each number is the sum of the 2 previous numbers. So 0 plus 1 is 1, right? 1 plus 1 is 2. Then 1 plus 2 is 3. 2 plus 3 is 5. 3 plus 5 is 8. And so on and so forth. The bigger the number it gets, the same thing. Just keep on multiplying the 2 numbers, the last 2 numbers. So in the last case there would be, for example, 1.144 plus 233 377. Just add those two together, the 233 and the 377 together. That will be your next number. And how to break it down? Once you divide those numbers as well, so if you divide now 377 by 233, it will be very, very close to the 1.618. That's the idea here, that the golden ratio is the divided number by the two previousses. It might be a bit complex. We don't really need to overdo this on the math, but this is basically the explanation. So make a screenshot if you want here, or just rewatch the webinar to go over this again in your own time if you want. Let's not waste too much time on this slide here. We're just going to jump into how to use it for our trading. That's what we're all here for. So how do Fibonacci lines work? Simple and easy. That's how you more or less will see them once you have implemented it correctly onto your account. In this scenario here, you will see on many of the slides I have ready here that we draw it based on the low. We find a trend more or less. We find the low point of the trend, the high point of the trend, and that's where we connect our Fibonacci's. You'll see loads and loads of examples. We're going to go to the live account as well to see them on the live account also. So hopefully by the end of this webinar, you will all be very, 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 very used to using the Fibonacci's, and hopefully they're going to improve your trading. And you can always tell me on the next webinar on the 4th of May, which will be about the timing of trading. What is the best time for trading? A very, very common question. So if you did use the Fibonacci's and they get you good results, let me know on the next webinar, please. And note the date, right? 4th of May is the next one. So there it is. You take the lowest point of the trend, take the highest point of the trend, and the lines will fall in. All the lines you see there will come in automatically. And you can see here now how these Fibonacci's start to show the result. At one point here, it came back up again to the 0. Then it did respect to the 50% line. Lots of respect down here at the 61.8. This is the golden number, which you always have to have a lot of attention on. And can you open CC for video? I'm Arabic. Well, Abdullah, we're going to have Arabic webinars coming up soon, so you can re-watch this webinar again many times, and of course you can watch it again when it comes out in with the Arabic presenter we have ready coming. Okay, there it is, 61.8. That is the golden ratio, and we see how much it got respected, but also we can see multiple more touches further down. Many more lines got respected. There you can see lots of respect on that point there, a lot of respect again on the 50% line. Now, how to set your Fibonacci levels. Very, 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 very good slide. So first, find the longest continuous uptrend or downtrend. Find Fibonacci grid from low to high on an uptrend and from high to low on a downtrend. Very easy, very simple. The grid will display the retracement levels. The first three ratios act as support resistance where the price can bounce. That is, in a nutshell, what the Fibonacci's will do for us. It's known as the lazy man or lazy trader's indicator, because you just draw 2 points and then everything comes for you. All the support resistances you need will come automatically. So you don't have to waste 10-20 minutes drawing support resistances. Just implement the Fibonacci's on the trend and there you go, you're good to start trading. Okay, I see lots and lots of comments coming in now on the chat, so I hope my moderators are filtering for questions that they can answer, and keep them coming, guys. Keep the questions coming. I will be answering lots of them at the end as well. So if you didn't understand anything, we will have a nice long segment where I'll be answering questions while we're on the live account. So this is more or less what it looks like again. There's the swing low, there's the swing high, and that's the only thing you need to draw. From the bottom down to up if it's an uptrend, up to down if it's a downtrend, and easy, all the lines appear. There you can see the market resisted this 0 point. You can see down here all the way on the bottom, it came all the way down to a full retrace, and there are the numbers where we can consider as good opportunities to close the trade or to enter a trade. So again, lots of respect. We can see these lines, how many times they respect, the market respected the Fibonacci. This many times is done subconsciously. People don't even know. If you're buying and selling stuff, you don't even know that it's the right time to buy or the right time to sell. But just naturally, these Fibonacci's, as mentioned, they're all around us in nature, so they are believed by many to be a part of trading as well. It's just the right time to sell. Someone sees the market going up, they buy it. It's according to the Fibonacci. They don't know it. Then they find that they made a good profit. You know what? I'm ready to sell right now. They close their trade, they sell their trade. without even knowing it many times, they are selling right on the right time according to the Fibonacci movement. It just naturally feels right. There's another moment where the market was resistant. It did not fight over this level here. And now let's take a look at this point here. Let's focus on the retracement. This is the important thing to look out for when trading on for Fibonacci's. We need to identify when there is an uptrend and the retracement of it. Then this is what it looks like when there is a downtrend. Simple, market is going on the first one, it's going up, then you see a retracement, the red little arrow pointing downwards, that's called a retrace, and then back up again. Same as the second one, the impulse and then the retrace. Retracement are short-term price corrections that can occur right during a long trend in either direction, right? Uptrend or downtrend. This is what it looks like on the platform. If you can identify it before I click the button, great. You should be able to see it. It's pretty obvious right there, dead in the center of the screen. Bringing it in even closer so you can't miss it. There it is right there. That is the retracement we see on this moment. Tools for binary trading. Very, very good question here. The last one I see from Saradol. Can we apply Fibonacci tools for binary trading? I've got great news. You can, and I will show you how on the live account when we get to it very, very soon. So your question will be visually shown to you as well. That's it there. That's the moment you have to always watch out for, these retracements in the market. We don't want to be doing our Fibonacci retracement levels at this point. We want to find the highest point and the lowest point so we can go ahead and draw the lines in. So here we go, retracements with Fibonacci. And we set our grid from beginning of the trend to the peak, right? I'm repeating this many times in these slides for you guys to remember this. There is the low point, there's the high point. It is an uptrend clearly here. So these are the two moments we're going to draw the Fibonacci's in. I'll show you on the live account how we do that for that one. And once we identify the peak, we wait to see the pullback, the retracement. There you see it. I noted it here, the red arrow. That is the retracement coming in. We can set the mark. We can see that the market finds support at a 38.2, right? Clearly we can see here this line I drew over, it did get support, very, very strong support there, multiple touches with the wicks, and then it takes up. Okay, I went a bit too fast. When the next candle closes, it confirms the reversal is back in the uptrend direction. So that next candle there that we see, it went touched it, came back up again. That will be our trigger more or less when using this. If we believe the market's going to keep on climbing, we saw that little retracement there. Market is back on track, so that will be a good opening point. An order could be placed, and the confirmation has been given, and all that further movement there could have been taken. This goes for anything, right? Forex, binary stocks, no matter what you're trading, same thing is implemented. As I saw a little over the side of my eye, I saw a question about the time frames. That is the big difference. If you're doing Forex trading and it's long trading, couple of days open markets, you can be on the 1 hour candles. If you're doing shorter trading, couple of hours, not couple of days, then it can be on the 15 or 30 minute candles you're looking at. If you're doing binaries, it will be much, much shorter candles. If you're doing 1-2 minute binaries, then it should be more or less setting up your Fibonacci's on a 5 minute or a 10 minute candle frame and executing your trades on a 15-second candle frame. I will show you everything on the live account very soon. Don't worry, guys. Let's keep on going with this slides, just for you to understand more about the Fibonacci's, everything I want to express over to you to make sure you guys are fully capable of using these on your own, and not only just using but understanding why you're using them as well and what they're doing for you too. So build Fibonacci based on a grid to identify hidden support and resistance levels. This is advantages we have with these Fibonacci's. Refine risk management parameters like take profit and stop loss targets. This is for Forex, stocks and commodities and cryptos more or less. When to take your take profits if you are doing long trades, not so much for binary or digital trading. And then build detailed entry and exit strategies with Fibonacci levels using extension levels to locate price targets. This is what we're going to do on the next one, right? Extensions. It's a very nice one. I'm not going to do any spoilers. Let's focus on this one first, get this one done. hopefully you guys have good results with it, and then you'll tune in towards the end of May for the second one, the second Fibonacci with the extensions. Alright, so here we go. Here's a nice screenshot with an example for an uptrend. Clearly we can see with our own eyes, I hope you guys are used to it already, where the entry point is, where we draw these Fibonacci's. There's the first point. We set the Fibonacci line from the bottom of the uptrend. There is the peak of the uptrend, right? Simple and easy. That's the only thing we're going to draw there. And then top of the uptrend. That's it. At this point, we have our Fibonacci's in, and then we're just looking at the market movement. Imagine that all the movement we see after this point, after we saw the retracement we mentioned before, once it did go back down, touch, and a couple of green candles appeared, that is the point we can say, okay, yes, the market has now retraced. We do have our peak. So at this point after, we can just look for how many times the market did respect this level. And as we can see on this example, it did retrace all the way back down past the 100 and beyond. This was Bitcoin on one-day candles. This screenshot was taken quite a while ago, as you can see where the movement was from. But look at all these points, guys, and many more in here as well, where the market did show respect to the Fibonacci lines, which are automatic. I didn't draw these lines in. Automatically they came once I found the top and the bottom. So lots and lots and lots of moments where you could open your trades. You could open a down trade, for example, on the second little circle you see on the screen there. Once it touches the next line, you could have set that as your take profit. And if you see the next break under as well, you could say, okay, you know what, I like this, Bitcoin is dropping, I'm going to open a trade because as you can see clearly it has reversed from the upward movement. Now it's coming down, so I'm going to leave it open until it comes all the way back down to 100 retrace. And you could have entered that something like that, for example, on the second circle in that window. It would have taken a while, maybe a month or two, maybe even a bit more than that, isn't it? It's like more like a 5-6 month thing, but it fully retraced all the way back down again. From the 40,000 went up to 66,000 and came all the way down to 34,000 in the end. So that would mean some really nice profits there. Same thing here now on the Bitcoin again. Now this is a downtrend opportunity we find. Even further back, we're looking now in August up until December. Clearly there's a downtrend. There's the peak. We set our Fibonacci grid as a downtrend has started. There's the bottom of it. And once we see some candles in the opposite direction and retrace once again, we saw green candles after the second point. Then we see some red candles. This is where you can say, okay, yes, the trend has more or less reached its peak, and you can draw these lines in. And straight away after, you look at the market and say, okay, if you ignore everything that happened after, let's say, 4 or 5 candles or 4 hours we're looking at now, after the second circle, then everything after that, imagine it never happened. Just by looking at it, look at how many opportunities we'd have where these Fibonacci's got respected. Okay, market moments the market respected the retracement. There's one where it just broke over. Respect very, very heavily on the 50%. Super many times. So how many times it respected the 61.8? Once there. This is the 61.8, as I mentioned, the golden number ratio, which we should always be looking out for because it's very, very good, this one. And there we go again. Support, the 50% was supported. Resistance again on the 61.8. Now we have some support here at the 38.2. All the way up against the peak, the 61.8. Very good selling point. If you have a trade open at the previous circle, you open the trade there in a buy direction, you could automatically set the 61.8 line as your take profit. So soon you just place the trade, put the take profit, leave it, and there it is. What is that, about a couple of weeks later, about less than a month, the trade closes and you have made a very nice profit. Going forward, there is a line I should do on that 618 to get this really fixed into you guys that this is very, very important. The 618 is a super important number for us. And then you can see here again, market collapsed after that, it dropped down, did support and respect many other lines though. Will there be a recording video? Of course, yes, you can rewatch these videos many times if you have them now on YouTube. So subscribe. Click the notification bell, and you can always be here to watch as many more videos. There's lots of videos you have done already in the past that are available already here, so you can watch loads and loads of videos to help your trading, including this one. Alright, so there's more moments here with this respect. Now, this is the last slide I believe I have before we go to the live account, and this is to show how to implement the take profit stop losses. So swing high and swing low is the very important point. It is a downtrend we're looking at here. So at this moment, very, very simple. We find a high point, we find a low point, and we draw the lines in. I hope you guys can hear me. Hope everything is going well from your side. So, there was the peak, there is the bottom, that's the first thing you look for. The swing high, swing low. That's part being locked in. Crystal asks, is it better for Forex or binary trading? Both. The more longer time frame you have to trade, of course, the more easier it is to understand and follow, the more better signals and clearer signals you get. But it's useful for both. If you're a Forex trader, use it for Forex, of course. If you're a binary trader, use it for binary trading. So, previous strong support between 29 and 32,000. So I have drawn a white line here on the previous support I found, and I can see clearly it touched multiple times down here, the Bitcoin did on the daily candles. I have my Fibonacci grid set in from the peak to the bottom. Then I can set my stop loss now at that 29,000. So if I believe the market is going to climb and it's going to go up, I'm going to aim for one of these four numbers there as my take profit. The 23.6, the 32.8, the 50%, or the 61.8. All four of these are very good, depending of course on how patient you are and how long you're going to be willing to wait for your trade to come in, and hopefully it does. But you do have the stop loss in at 29,000 in case the market goes in the opposite direction. If say the market does go up, it could hopefully hit any one of these numbers, and like I said, depending on how patient you are, how long you're willing to wait, or what your personal belief is, but you do see here now where you can draw these, you take profits. If you are ambitious, you just take your take profit at 61.8, that will be around 55,000, and hopefully very, very soon that profit will be taken and recognized. Another good idea, you could do a multi-chart. If you see that many assets are in a similar direction, an example here is the top 6 companies, the biggest companies out there, and we can see that they all are very, very high, very similar movements. An upward, a downward, and the movement is very beautiful to follow there. So you could use a multi-chart, and hopefully the markets go well. We have made a few little tweaks with the microphones now, so surrendering. Do you hear it better now? Is the microphone settings better? I hope you can hear me better now, guys. Is it still an echo? Voice surrounding. What's TP and S and SL? TP stands for take profit, SL stands for stop loss. Something. That's good question, but yeah, very useful tools if you are doing long-term trading. So right, now sound is okay. Okay, good microphone. I'm glad you guys are happy with the microphone settings now. Perfect, lovely. Back to it just in time for the live count, as we're going to be going to the live in a couple of seconds right now. So just a little recap. Fibonacci retracements and extensions analyze uncovered hidden support and resistances. Retracement numbers are quoted in percentage. So those numbers we saw before, the 68, the 50%, the 28.6, these are percentage numbers, right? It's a percentage movement. Important to note. Then Fibonacci measures the crowd behavior and willingness to buy or sell securities at key retracement levels. Very technical way of saying that it's embedded in us as traders, as humans. If you go to buy some fruit, for example, you might find that something is very, very expensive. You might not have had, for example, I don't know, apples. You may not have had apples for a while. You're not an expert. You know what the price is, but just you get this feeling that it's a bit expensive. I don't want to buy them. Or that's a great price. They're very, very cheap. I am going to buy them. So this is just based on prices and numbers for simple Fibonacci. Crowd behavior is the thing to take from that. Then Fibonacci grid works equally well in uptrend and downtrend and in all time frames, as long as you're using them correctly, right? That's an important side note here. All time frames, uptrends, downtrends, draw them correctly, and you should be good to go. Now, this is a nice little slide I got here for the binary traders. Let me just go back here. So this is 15 seconds we're looking now, right? This would be something referable for binary traders, because if you're doing 1 or 2 minute trading, you should be looking at 15 or 30-second candles for your trades. So I found the lowest point, the highest point, and I just draw my lines in, and then I can see where the market has respected. Not every time, because of the noise. It is short-term, short candle frames, so there will be some issues. It won't work every single time, but you can see many times here how the market did stick to the lines. It did resist these lines. So if it comes up, touches a line, you could consider waiting for the next candle to close. If it closes above the Fibonacci, then you're good to make the trade in the upward direction. If it breaks through the line and the next candle closes under the line, then you could place a trade in the continuation for it to continue until the next Fibonacci line. So we'll see this right on the next slide, which is for the live account. So I'm going to just go straight here. We're going to start up first for commodities. So, okay. Right, okay guys, so let's just, okay, there we go. So here we are on a downtrend movement, right? We see the market's low point, we see the high point up here. So this was the strong uptrend. These are 1-day candles, and I implemented the lines straight in from there. So let me just take it away to see it without the lines. That's what it would look like without them. So I'll take the lowest point. I'm going to actually just draw it in right now. I'm going to go take a Fibonacci, take the lowest point all the way down there, the highest point up here, click it in, make it white for you guys to be able to see it nice and clearly, make it thicker so you guys can see it even better. And what happened? Market price touched up here, came down, we see it respected this point here. So let's just get this activated here as well. So, right, market came down, we see the respect at this point there. Then it comes back up again, it respected now the upper line. Respect again on the next line. Lots of respect at this point. Back up again, it respects now this point. Down again, we see the respect again. It doesn't go straight through the line, it respects it. Comes up to the middle. We could technically draw a horizontal line here as well. So I could even do that, add more lines to my trading. So I could take a horizontal and say there is a interesting support between these two. So I'll take this one as well, widen it, white it, make it wider so you guys can see it. So there's another support I can add in there. And then we continue. It keeps on going down, stays up, respects this level here, respects again here, and here it's going back up again. Now it's challenging today the 38.2. This is for oil traders. This is 1-day candles. Based on this Fibonacci, there's two possible outcomes. Of course, this is obvious. It could break above, close a green one, and we could maybe see it come up to challenge here. If the market has a strong momentum, it might challenge, buckle it a little bit, and end up going to the next one, the 23.6. I think this is maybe related with the Russia-Ukraine situation right now with the oil, so we might see maybe sticking around here, might do another little weave between, who knows, it might retrace all the way back up to 0. Or the alternative scenario could be this line doesn't succeed today. It fails and it breaks. It holds up a little bit there, stays under, maybe the next candle as well, and then it comes back down again and challenges this previous support, the 50%. Maybe it buckles, maybe it comes down to the 61.8. So if you see over the next few days the market price here stays underneath the 38.2, then you could most likely consider a trade and putting the 61.8 as a take profit. So you'd take a take profit at $86. You'd buy the trade, let's say around 100 or just under 100, and put the take profit here at the 86.78, and stop loss. You could place the stop loss somewhere above between these two lines. I would say somewhere like 103, 104 would be a good take profit stop loss if you believe the market's going to continue dropping, and the opposite in the other side. If you think the oil price will keep on climbing, then you do the opposite. You would buy your trade once you see it close in here. You would take a take profit at 23.6, and you have your stop loss back down where it started. Let's say where it is here. The $99 mark could be your stop loss. I've been looking for this channel, retains Mr. Jones says here. Well, look no further, we are here. Next one now, gold, very, very similar. Let me just take it away so we can find it together. Easy to understand, uptrend, right? So we're going to go to our graphic tools,
take the Fibonacci, lowest point is there, so let me just click on it, zoom it in to bring it closer as well. There's the highest point. That's it. That's all you have to do, guys. That was not difficult at all. And then color it anything you want. Purple is a lovely color, so let's go with purple. Doesn't have to be, there's no universal color coordination. It can be any color you guys like. So let's go with purple. My mother's favorite color. She's not a Roman or anything, but cool. All right, so what happens now? What happens in here? Let's see. After this point of the peak, we do see it came down to this point. It respected it, came back up. Here we go again, breaks over, breaks up, but then it finally does break down. This is 1 day candles, and we're looking here on the dates as well. This is the beginning of March. There is, and there was at that time, something very big going on, the Ukraine-Russia situation. So we know more or less the fundamental what is making this market move as well. But Fibonacci still get respected. Look at all this respect here at the 50%, and we can also see that there is strong respect here. We're very close to the 61.8, the golden ratio. Very, very nice one here. This would be a prime example of making a good trade. If you see the market has resisted, you see it's dropping, sticking around there, this would be a good trade position to buy the trade and leave it open until there. Have your take profit on the 61.8, just at that level, 1,890, and it would have been a lovely profit. At this point, you see the market comes up. It's now sticking between this zone here, sticking in that area, and now it's climbing strong as well. This candle today is right between, at this current time, this one here. If this candle is to close above this line, then the next target would be this, or maybe a full retrace all the way to the top again. So there's no other support resistances between. Realistically, what could most likely happen if this one does close green, it could maybe break above, dance a little bit around here as it did in this area. As you see this movement here, you could see something similar happening in this zone there. And if you are happy with that, if you bought your trade, let's say it drops a little bit back down today to come to just around the 197, then you close it hopefully around the 2021 or 2020. No bad prices, no bad moments to take a profit. And let's move along. BMW, German car manufacturers, having a very torrid time right now. German factories, of course, are running on electricity, and if the price of oil is jumping as we have seen it jumping, price of electricity goes up, and that means that many factories will have a much bigger expense. People anticipate that, and we see the massive drop in BMW. What do I know and when to buy, sell? Okay, Samson, good question again. You've got lots of good questions, Samson. Well done. Well, first thing what I want to do is, with your guys' help, the take profit stop losses, I'll mention a few more times, Samson, so you'll hopefully understand how to use those. It's up to everyone's interpretation. If you are very ambitious and you don't mind waiting, you could place your profits, take profit stop losses anytime you want. If you are not willing to wait and you're not patient, you can take smaller profits, right? Let's just draw them in. I have it ready, but I prefer to do it with you guys watching live just to understand how easy it is. There is two ways to do this. This is 1 day candle, so I could take this up here as the peak and draw it to the bottom, or I could say that there is a movement here, a retrace back up, comes lower, goes higher. Because if you look at this moment here, this is maybe a good little moment to show something different, right? So we can see here, market is at the peak, right? All the way at the top there. Now I can see it dropping to this point. Let's duplicate again. Now what happens next? It drops even further down to there. What happens after that though? Market climbs. And where does it climb? The previous climb was here. So when it came from here up, it touched that point there. Let's make these ones now. I'm not going to waste too much time coloring them. Hopefully you're following me well here. So then at this next, went upwards here, right? Came down again, went up to a higher point. So you have one jump up higher. So this one would say it's a bit mixy here. This here is a much more clearer downtrend. So I'm going to go with that downtrend there. Let's just get rid of all of these lines I just drew, get rid of the mess. Take a Fibonacci. There's my peak. There's the bottom of it. And zoom it out. See, many people could say there's the 161.8 all the way up there. This is a very possible thing to happen, but it'll take a load of time for this to happen since you're looking at 1 day candles. This was 1 minute candles, then you could wait a few days and it would get there. But this would take months for BMW's price to go all the way up here. Where realistically we're looking for the retrace, maybe up to 100% retrace or in the zone there. Let me just make it a different color, more visible. Let's go now. Red is not so good. Blue, not so great. I like the purple. Even orange. Let's go with orange though. Okay, make it wider for you guys to see it clearly. So there you go, guys. You take the peak, you take the bottom of the trend because it is a downtrend, and you just look now for your opportunities. There's the touch. We see respect here. Let's get the little airbrush back on again. So we can see respect in this area there. You can see more respect now on this point, the 38.2. Lots of respect actually around there. A slight touch. 1 day it touched the 50% BMW, and then it collapsed back down again. So we do see a touch here now at the 23.6. It did respect it. The next one is green. After this touch, there's two possible outcomes, of course. You could see something like that, which realistically will not be like that. It would be maybe like here, down, slowly dancing around here, then going higher, dancing around, coming up. If BMW is to recover, that movement could be possible. But if it's the opposite, then it could be another few touching here, as we saw previously here this moment. So it could touch a few times along the line, break under, drop, rebound, drop, and then again. Something like that is very possible. So drawing the lines in though gives you lots of information. Now to answer the question from Samson here about the take profit stop losses, I can't tell you, and no one can tell you directly straight what's going to happen. If it's going to be up or if it's going to be down. This is a decision that everyone has to make, right? You guys have to make it the same way I have to make it. I have to decide whether it's going to go up or down based on fundamental and of course technical. In this case, my Fibonacci's. If I believe now that the market is going to go up, and I'm patient, this is 1 day candles, I don't mind waiting, but I think BMW is going to recover, let's say, and it's going to come up to this point there. Maybe not at this level, maybe it'll do, like I said before, the little zigzaggy motion, and it'll maybe in end of May, or what is that there? Yeah, beginning of May, 5th or 6th of May, it might hit that price, let's say. In that case, I will want to protect myself. I would straight away open a trade. Let me just get rid of the... Okay, so I'm opening my trade here. There it is. And let me just pull it up. Take profit. Let's just go super big. Okay, where is that take profit now? Did it not show me I take profit? 107. Okay, I went way too high, didn't I? There it's up there. Let's just drag it down and put I'll take profit at the 61.8. I don't mind waiting. Then the stop loss, I think it's gonna go, that's a bit too far anyway, but you get what I mean. Take it now from here, drag it and say that there is my stop loss. 73, let's bring it down to 72, that's my stop loss. So I'm risking this movement here, which is not a super big movement. Let's zoom it in for you guys. So my trade is in here, airbrush it in. So this is my risk point here. This is all the amount I'm risking. From 76 to drop to 72. On the positive, it's 10 points, right? From 76 to 86 is my take profit. So the risk to reward ratio is a lot. I'm risking $3.84 and I'm looking to make $10.69 as my profit here. Easy, simple stuff. Very easy to understand, and it could be exactly the opposite. If I believe the opposite is to happen and the market is going to come down, I will take my take profit at this point. My stop loss up here, I'll go for a sell trade, of course. I'll put my stop loss there, and my take profit, I would most likely look at it at the 0. Expect it to come crashing all the way down, break under this support, the support line of the 23.6, and come down to this point, maybe by the middle to end of April if it was to continue dropping. All right? Bitcoin, last one. If we go to the last one I'm hoping you guys are waiting for, the binary one. Okay, I see a question. Can you use the tool take profit stop loss at the left hand side of the screen by dragging up or down? Yeah, you could set them in from here, from before you open a trade. You can place your take profit stop losses in at any time. I just prefer doing it the bottom way here, putting in from the bottom and then dragging them around. But when dragging them around, just go back to BMW. Be very, very careful, guys. When you are moving the screen like I'm doing right now, zooming it in, zooming it out, never click too close to your take profit or stop losses. It's very possible to click that, drag it around, and in your attempt to just move the screen, you might just do that, drag this, bring it all the way down, and you close your trade where you didn't want to by accident. So don't do that. Be very careful. If you are having take profit stop losses, don't click the screen and drag it around because you might end up losing your trades, right? So, okay, Bitcoin. Guys, what do you think? Where is the trend? Is it an uptrend? Is it a downtrend? Where is the latest trend you can see on this as things stand here? I think there's like a 30-40 second delay on the chat, so waiting for binary. Okay, I'm not going to waste time then. Right, let me just go straight away to the Fibonacci, grab it in. There's the peak, there's the bottom, right? I'm not even going to color it, not to waste time, because I think you guys, many of you are waiting for the binaries part. So there it is there. Let's bring it in to see very fast. There might be some Bitcoin traders who are interested in this one. So again, 1 day candles. Let's get the airbrush on and working. Did I click it or not? Yep, there it is. So low point respected. This point here stays in the channel. I could draw another support in this level here at the 45,000 marker because I do see on multiple occasions it respects it. But then here is a dead zone again between them. But there is respect on this point. Lots of respect there, lots of respect here at this Fibonacci grid here, which is at the 46,000. One might think the 45,000 is a round number, a lot better, but here we go. Fibonacci shows us a much higher one. So if you had a buy trade at this point there, you could have sold it at the 38.2. And if you had it at the 45, you would have sold it there. So you made an extra little profit of this amount here by keeping it with the Fibonacci's. It didn't stay above it, it collapsed. Broke under, straight break, right? It didn't hesitate on this one. It touched close to it, but then broke straight under, and now it's trading underneath this level, under 40,000, but it is a round number. We could possibly see it come back up again and stay in this area. If it does, I would say don't trade it until you see something clear. Here it did break under it. There is a green candle. One could say this is a good sign that it could continue dropping down, possibly to the zero line under the 35,000. But it is Bitcoin, it might be a bit preemptive, so I would say maybe wait a little bit more for it to make a bigger distance. If it is going to continue dropping, let it come to, let's say, this point there. Let me just just draw a line. So yeah, around here, around the 30, oh god, that was terrible. There, 37,000 is that? Yeah, around 37,000. As you can see, there's a good support here. So you can draw your support. Actually, I'm going to do it. Let's draw the support. So there, if it is to come to this point and continue, then I'd say, okay, go for your trade, take your trade in that direction, perhaps would be a good opportunity. All right, guys, here we go. Last but not least, the one you've been waiting for, and we're looking at Euro USD binary. Right, what do we see? Now we're looking at 5-minute candles, because we are going to be doing short trades, right? We're not going to be doing long trades for binaries unless you like that. But I think most of us are doing short-term 1-minute, 2-minute trading. 2-minute is by most traders a more preferred one because it does give a little bit more time for us to react. But what do we see? There's a downtrend here. There's an uptrend reversing back up again, zigzagging a little bit. These ones are not that strong, but here, this is a nice strong uptrend here, right? That's the last more relevant one. So let's go with that one. We're going to take our Fibonacci. Let's get rid of all the other stuff I have there. Take it from the bottom here. Take it to the peak. Draw it in there. And there we go. Let's color it nice and visual for you guys to see it nice and clearly on my screen. And what happened in this time frame now. On the 5 minutes, it is our first look. We saw it touched. Didn't really stick around for long. There was some support here at the line. And then again, it did support 50% because it touched it with the wick and it's still dancing there. We're going to do one more little alteration now. We got a good idea of what's going on the 5-minute candles, but we are going to be trading shorter, right? We're going to be trading on the 15 seconds. We want to have around 2 minutes, let's say, available for the trade as well. So I've got 2 minutes, 45 seconds there. And what am I waiting for? Moments of respect. What I'm waiting for is to see something like this there, where you can see the market stuck to it but then broke up, respected this one, stuck to it, all the way to the peak, right? That's where I drew my Fibonacci. Then it collapses, respects it, moves up a little bit, respects it, comes down, right? You can see a pattern here emerging, right? It's like respecting these lines. Look how the market is stopping right on the line. We saw all this little noise here, all the noise here, right on the lines here. It is retracing downwards now. So strong instincts more or less say that we might see continuation of this and a break under. So what I want to see would be this candle right now to just get rid of the airbrush. There we go, it's doing it right now. So I want to see this candle close under that line of the Fibonacci, and I'll be thinking straight away that I'll be aiming for the next line underneath. So I want to see this candle now close. There we go, and the next one to confirm it. This one is the confirmation candle. This is my go trigger. I want to have around, I would like to have 2 minutes available for this, but still fine here. I'm waiting for this candle to close underneath this Fibonacci. There we go. It did close as a dodgy though. I'm still going to take it. I'm going to take the trade, confirm it in, because it did break under. There was some noise there. It did break under. That is the idea of this. My thought process is, there was the initial upward movement. Now it's in a very strong downward movement. I want to see how low it can go. So the lowest point was all the way down here, hence I have the 100 down there. And it's coming down very, very heavily, right? It took a lot less time for it to come down than it did to go up. So it's dancing around this. It's not really good because it's still dancing around the level here. I would have liked to see by now the market dropping even further and coming even lower down here. My pings are reminders here that we should be coming close to the end soon. It's been pretty good so far, and now we can see the market is trading nicely. Trade is it still going? Yeah, 26 seconds left on this one. Okay, let's see. I was just going to wait for this trade to end. Can't see the chat here. I believe there might be an opportunity for you guys to see here now a poll where you can rate my presenting skills and the webinar itself. So please do take a few seconds to rate the video. If you like it, don't forget, subscribe to the channel, ring the notification bell, click the notification bell on the bottom to be notified when we have next webinars, and like the video. Like, subscribe, and click the notification bell. Okay, what happened? Trade is still going. We see here the market is dropping. I think the trade is pretty safe. We did read that well. It broke straight through the 68 as well here, which is quite interesting. Very heavy movement in the downside there. But that was the usage of it. Trade is successful. Market is dropping like a rock though, right? So it looks like euro is not doing so great on the binaries here. The direction is very, very clear, downward, and as long as this trend is standing, I don't have to change anything, right? If the market is to reverse, if we see lots of green coming now, and the market starts climbing back up again, then I can say, okay, like I did before, this upward trend is no longer useful, now this downtrend is useful, so I'd basically, once this Fibonacci is out of the question, I don't need it anymore, I'll just take it away, I'll go back to my graphic tools, take a, not horizontal, what am I doing? Graphic tools, take a Fibonacci, find, for example, now the highest point up here, the lowest point down there, and figure out where the retracements are. But first I need confirmation the market is retracing. I need to see a bit more green. I want to see the market rebound back up to this point here before I can seriously consider switching things around. Until then, I have still a very nice Fibonacci on the previous. Lowest point is down there. I'm doing this again and again, guys, because I want you guys to be really, really, really comfortable with this. So there to there, that is our zone, and easy as can be. It broke under the 61.8, and it's still dropping. There was a bit of a struggle, let's say here, but it's back to red. It's in a dead zone though, so I can't really do much now. I wanted to touch one of my lines as it did before. It was at this point there, and I caught this movement. I did see that little wiggle. What I'm looking for is the market to do some wiggling. You can see here, it tried a few times, it resisted, it stayed under. Here, again, touches the line, touches it, stays close to it, but then it breaks. It touched it too many times, and then it gave up. Again, look at that. How many times? How many times? Finally, it breaks under, and the same thing happens. All that there. Here again, it breaks. Not much this time. On this line, it went straight through, straight under, but now we can see it's fighting back now. Right, so that's it for this slide. I hope you guys found this one useful. I am now going to be answering some questions of yours. I hope my moderators have been answering lots of questions as well. So if you have not got answers to questions, we do have some more time here. This webinar has been almost an hour though. That's a little bit on the long side where I don't want them to be dragging on for so long. But yeah, let's see if there are any questions I can answer here. My funds, a server, most memory, Samsung, a day trade or month trade, which is better? Ooh, well, Samsung, that's a great question. A day trade or a month trade, it's a patience thing, isn't it? If you have the patience to wait a month, Samson, then by all means do wait. The longer you put into it, the more profits you can make. If you're going to be looking, for example, at, let's say, Bitcoin, as a long example here, you could see that if you're waiting now for this movement to happen here, you wanted to see it to touch one of the lines before you make your decision. If it does come up again, touches, closes above, you see a green candle appear there, you could go for a buy trade, and it can be anything. It doesn't have to be exactly a month, or could be 2 weeks, could be 3 weeks, could be 3 months. It's all depending on you and how patient you are. If the market goes in your favor, the important thing is knowing when is the moment to sell, when you can take that profit out. Pretty interesting, says Mr. Saho. I love it. The webinar is helpful. Hope to see more of it. Thank you very much for your feedback. That's what we want to hear. And we are going to have another one at the end of May, Saho. So do click the notification bell here, subscribe to the channel, so you will be notified for that webinar. And we are having on the 4th of May, the next one, same time as today, the webinar for correct time for trading, or best time for trading. That's something that is many times asked to me, what is the best time for trading, and all depends on how you like the markets. We'll dive into that one on the 4th of May. Okay, one more question. Let me see if I can see another question here. Anonymous Ghost Detector. Love the name, so I have to make your question the last one. It would be great, I guess, if we had RSI on Fibonacci. Very good. Excellent, excellent point. Definitely you can. You can add any indicators you're comfortable with. RSI is one of my favorite ones, so I could definitely just take an RSI, apply it, throw it in there as well, and use that to my advantage also. Let me go to Euro USD for the binary side. Indicators again, popular, go down, RSI, apply, and there it is. And yeah, I didn't need any indicator before. It was cut, straight cut, but you could definitely do the same thing with the RSI. Usage of it is very simple. You see at this point up here where we did find the initial, look how the RSI shows the same thing more or less. Let me just implement this here. Is it working? Let's get the circle in. So right, look at that moment there. Identical with that up there. Here we can see a retrace, identical there as well. This moment there went even lower down on this one here. Right, here again, low points, massive drop, dropped all the way down to here. RSI shows it as well. Okay, RSI shows me now that it should break back down again if I'm going to go with the RSI, because it did peak on the RSI here, and it did break the line on this moment more or less on the same point, right? When you look at that level there. So there it goes. RSI and stochastic working, Fibonacci working perfectly together. The trade could have been taken there, and the direction is more or less heading downwards. It could possibly reach another level here, maybe even lower because it's a downtrend. It could come to this point, I would say around here. I could draw a manual line at this level, so I can see a strong support happening there. So I could have that line added for myself to add more lines to the grid, not have such a big gap in the previous. Right, guys. Slowly, me how to draw the Fibonacci, please. Slowly show me. Okay, I'll do it one more time, right? One more time how to draw the Fibonacci's. This is the last, for Samson only, last time how to draw the Fibonacci's in. So let's take it away and do it slowly. Take this one away. There's the bottom of the peak, bottom of the trend. There's the top of the trend. So it's an uptrend. I go to the graphic tools, Fibonacci, take it from there to the peak. That's it. If it's a downtrend, the opposite. If I'm going to take this as a downtrend, there's the top, there's the bottom, that's it. Very easy, very simple. Anyone can do it, everyone can use it, and you trade accordingly to your lines. Once the market comes and touches a line, you enter your trade, hopefully successfully. Let me know on the next webinar, 4th of May. Subscribe to the channel, click the bell, notifications on, and I'll hopefully see you all on the next one. Have a lovely day. All the best, guys. Take care. Bye-bye.